Okay, so I'm going to use ProConnect to prepare a Form 1065, which is a partnership. This partnership has 4 partners that each own 25%. So I'm going to put in my information and then make sure that it goes to my Schedule K and then ultimately to my K1s correctly. So I'm going to go to Tax Return and I'm going to choose the return type to be my 1065. Create Tax Return, Add New. It's a business one. I'm making this up. You would put in their address there. Form 1065. I'm going to do 2020. I'm going to click on Input Return, and then I'm going to start with my partner information. My first partner's name is, and you'll want to put in first and last name, but I'm going to do first name only to be faster. I'm going to make up this, but if you're given it from the book, use that. Use the address if you're given it by the book. And as a rule, whatever you're given by a textbook is what you want to put in. Everything else, all the other fields, you can ignore if you were not given that information. So here's where I'm given the information for each of the partners, and I am given the Social Security number, so you'll want to use that. And then it says that they're equal partners, and since there are 4 of them, that means that they're each going to have 25%, and it does say that they share in the debt equally. So I'm going to choose General Partner for each of them, and then I'm going to go and I'm going to add each of those just like that. Go ahead and enter in all the information I need to. Now working my way down, I'm going to click onto Partners Percentages, and I'm going to put in 25 for the beginning and 25 for the ending because they have the same percent for beginning and ending. And they share everything equally. They don't have any change in ownership, and for now I'm not going to need the partner basis worksheet. So next I'm going to work on my ordinary income. I'm going to click on ordinary income and then click on income. I'm looking at my income statement and using my tax basis one, I'm going to look for my gross receipts, which for this person is considered fees and commissions. So that's going to be $4,800,000. I don't have any returns and allowances. And under other income, I do have some taxable interest. So taxable interest is not going to be found under ordinary income because it is a Schedule K because it's separately stated. So I'm going to go ahead and click on Schedule K. And once I click on Schedule K, I'm going to click on other Schedule K items. Click on that to open up the screen. And I'm going to look for a place for interest income, and I find it right there, interest income. $1,600. All right, I'm working my way down my income statement so I do not forget to put in anything. So I like to go in order. And then my next one is going to be advertising and public relations. So I'm going to be looking for advertising expense. That is ordinary income. So I'm going to go back up to income, which looks like if I click on income and deductions here, then I can scroll up, which will let me click on ordinary income. And I'm going to click on deductions. And then I'm going to consider this advertising, so that's going to be $380,000. And then W-2 wages will be under wages. It's in alphabetical order, so salaries and wages. I'm going to put that in as $1 million. And then business meals, which is subject to 50%, which that would be meals and entertainment. So meals in full, 50% deductible is the one that I want to use. And it says to put it in full, which means that it's going to take the M1 for me. So instead of putting in 100,000, I'm going to put the whole thing, and then it's going to take it for me. So I like to double check that I'm on the right track. So I click on review return. I'm going to make sure that it put in my meals at 100,000 and make sure that it took my M1 of 50%. So I'm going to go to 1065 and I'm going to look for my meals. And I can see that it's down here under other deductions, and then it says see statement 1. So I'm going to go to statements, and when I click on it, I can see that it did give me meals and it did already give me half. Now let's go make sure that it did the M1 correctly. So now let's look on the M1, which is going to be right below the balance sheet, and it took an unfavorable M1 of $100,000. So far we are doing good. Next, I'm going to look for travel, and it's in alphabetical order, so I'm going down to the T's for travel, and it's below deductible, and it's $320,000. Then I have legal and accounting fees, so I'm going to put that under accounting if you wanted to, or if your client had, if you think that it's better, you can separate the legal and accounting. And if there's ever not a place for a specific amount, you can always do it under other and describe it. It's best to go by what you've always done in the past so that everything stays the same. So when you compare tax returns from one year to the next, you can see it. But if it's a new client, then you'll need to make these decisions and you'll base it off of materiality. All right, $80,000 is office rentals paid. So that's rent expense. Office rentals is talking about rents. And if it is office, we're talking about a building, and real property is building and land. So I'm going to put it under this. So office rental is $80,000. Interest expense will be under I for interest, and that is $10,000. Insurance premiums will be under insurance. That's $52,000. Office expense is under O for office, and that is $200,000. Payroll taxes is going to be under taxes, payroll taxes, $92,000. Utilities will be under U for utilities, $54,800. All right, so now we're going to look for our guaranteed payment. So we noted on our Excel that guaranteed payments were both ordinary income. So let's start there. Ordinary income, looking under deductions. And if I look, I find guaranteed payments including partner health insurance. But we're also going to have it separately stated because we're going to have to allocate it to the partners according to which ones they received. So we're going to put it in under 4 services, and we had $800,000 plus $600,000, which is $1,400,000. If we just left it like this, I need another zero, then it would allocate it based off of 25%, and that's not what we need. So we're going to go to this tab called Special Allocations, and then we're going to allocate exactly how much each one gets. I was expecting that to say 1,400,000. Oh, I know why. So I'm going to go to Guaranteed Payments for Services, and then I can see that my total available is 1,400,000. So Ross gets 800,000. And then Omega, Carey, and Cardigan got a total of 600,000 divided equally. So that's 200,000 each. And then I like to make sure that it's going to look the way I expect it. And so now I'm going to preview my return. So I'm going to get out of the special allocations and I'm going to go to check return. Forms, US, Form 1065. I expect to see 1,400,000 as guaranteed payments on page 1, but then I also expect to see it on Schedule K as a guaranteed payment. In addition, I expect to see it as an M1, and I do. And then also, if I were to look at the K1s, I would expect to see 800,000 for Ross, which I do, and then 200,000 for the first one, Omega, there's Omega, 200,000. Carey, there's Carey's name, 200,000, and Cardigan. So after each step, I like to check and make sure that it's showing up on the forms as I expect. So now I'm going to go back to Input Return. Working down my Excel spreadsheet, my next line item is Tax Exempt Interest. This is a Schedule K item because it is treated differently for different partners, so it's separately stated. So I'm going to go to Schedule K, Other, Schedule K. So I'm under Schedule K, and then I go to Other Schedule K items, Other Schedule K items. Then it will load, and I'm looking for Tax Exempt Interest. I couldn't find a place for it, but when I scrolled to the very bottom, it said Note Enter Tax Exempt Income and Deductible Expenses on in the Schedule M1 input screen. So I'm going to go to the Schedule M1 input screen. So I'm going to click on Input just to sort of reset myself. All right, I am under Input. Then I'm going to look for Schedule M1. So here's Balance Sheet M1, M2. Then I'm going to click on M1, Book Tax. Then I'm going to click on M1. And then I'm going to look for Tax Exempt Interest, which will be under the favorable. So tax exempt interest from in-state bonds, and the total amount of tax exempt interest is $3,200. So I would like to know how this is going to show up. So I'm going to do check return. I shouldn't see it on page 1 because it's zeroed out, but I should now see it on Forms US 1040. I should see it on Schedule M1, and I should also see it on Schedule K. So M1, tax exempt interest, it's there. And then it also should be on Schedule K because it's separately stated. And there it is under Other Information, Tax Exempt Interest. And it should also go to each K1 according to their 25% ratios. So there it is right there, 800. All right, back to Input Return. And next up, I have a net gain on stock sales, which is also a Schedule K item, but it's not an M1. So I'm going to go to Schedule K, Other Schedule K, Other Schedule K items. and it was described as a net gain on stock sales. I need to see if it was short-term, long-term, or what it was. So I'm going to go back to my instructions, and it said it sold those shares for on December 15th for $80,000. On March 15th of last year, during the year, the LLC sold 2 securities. On June 15th, they had purchased that, and it sold it on December 15th. That sounds like a short term. On March 15th, that one sounds like a long term. So I need to separate this into short term and long term. All right, so I'm going to do a calculation here. June 15th, Rock purchased 1,000 shares for $100,000, and it sold those for $80,000. So we had a loss of $20,000. And because it says that we purchased it on June 15th and sold it on December 15th, that is short term. We held it less than a year. Then the other one, we purchased March 15th of last year. We sold it for $160,000. So we had a gain this time. And this one was a long-term gain. All right, so we have a short-term loss of $20,000. And we have a long-term gain of $24,000. So that's going to net out when we look at it on the K probably of a plus 4,000 gain. We'll make sure. Let's go to check return. Forms, US, we're going to see that on Schedule K. 1065, let's go down to Schedule K and see what that gain's going to look like. Okay, so we can see the net short capital gain of -20 and net long-term capital gain of 24,000. So you can see why we need this to be separately stated for our shareholders, because they may have other gains and losses to net this against. So that's why we keep that character of those gains and losses and report it to the shareholders. It's then going to take 25% of that and give it to Ross, Omega, Carey, and Cardigan. So let's click on Ross's K1, and we can see that the gain and loss came over at just 25% to each of those partners. Omega would be the same, and so on and so forth. So that's why we have to separately state those types of items. Now let's go to our input return, and we're going to put in, working down the row on Excel, our charitable contributions of $28,000. So I go to Schedule K, then I go to Other K items, and then I'm looking for charitable contributions. And I'm going to assume that it was cash for a 60% limitation. I'm going to put in $28,000. And then I'm going to put in my Section 179 deduction, which is related to depreciation, but when you take an immediate expense for Section 179 property. And Section 179 property means that you can expense the entire cost of it. So I'm going to put in $20,000 here, and I'm going to make sure that it shows up the way I expect it to on my tax returns. I'm going to go to check return. I expect to see that number as Section 179 information on Schedule K. I'm going to go to Forms. I'm going to go to Form 1065. I'm going to go to Schedule K, and I'm going to look for $20,000 of Section 179. I can see my charitable contributions, but I don't see my Section 179. So evidently that was not where to put it in. So I'm going to go and try again. So I'm going to go take it out of there because you don't want to ever leave in anything that wasn't right. So we're going to go to Input Return. We're going to go to Other Schedule K items. And then we're going to take out that override that we did. All right, I'm going to look under Deductions, because that's where I expected to see it. I just got distracted by that one. This is 179. All right, rental estate, guaranteed payments, interest, dividends, royalty, short-term capital, recaptured 1231, deductions. Section 179 deduction. Let's try that. Check return. Forms, US, 1065, scroll down to the K. And there it is on line 12, $20,000. So now my Section 179 is there. Then it will go, 25% will go to each person so that they know what 179 is coming to them. There it is. Each person got their percentage. All right, now let's just go see how close we are to everything. So I'm going to check it to my Excel, and I'm going to go to check return, and I'm going to look on page 1 and make sure that it matches what I thought I should have on page 1. And $979,200 for ordinary business income loss is what I expected, so that is correct. Then I'm going to look at schedule M1, and my book income is right, my M1s are right, and my taxable income that matches is $2,336,800, and that matches my taxable income. So now I need to work on my balance sheet and my schedule M2, which is not input just yet. So I'm going to go back to input return, and I'm going to go to balance sheet, and I'm going to put in my numbers. So for the balance sheet for beginning cash, balance sheet, federal, cash. All right, beginning cash is $444,000, and ending cash is $380,000. We solved for that in Excel. And then tax exempt securities, beginning is $120,000, and ending is also $120,000. Marked securities we're going to put under other investments, and so we'll just type it in and put the beginning number and the ending number, $436,000 beginning and $300,000 for ending. Next we have leasehold improvements and its accumulated depreciation. So since I need to put it in as accumulated depreciation, that must mean that it is a depreciable asset, which leasehold improvements are. So it's $960,000 and $980,000, and accumulated depreciation is $960,000 and $980,000. All right, so that should get me to my total assets. So next I'm going to look at my liabilities. So under liabilities, I have an operating line of credit. That sounds so current that I can probably use accounts payable, but I guess to be more specific, I will put it in as other current liabilities. So we'll call this an operating line of credit, and the beginning balance was $200,000. And at the end of the year, I owed $160,000. And then for my balances for these partners, that's an override account. So I'm going to need to put these in on the M2. So I'm going to click on M2, and the beginning capital was given to me, and it was made up of $200,000 for each of those people. So that was $800,000 for beginning capital. And then they told me that they did not make any contributions during the year, but they did distribute some during the year. That was $1 million that was distributed evenly. So distributions was $1 million. And so right now I'm just going to go see what I've got. So I'm going to go to check return, and I want to look and see what my balance sheet is looking like. So forms, US 1065, scrolling down to get to my balance sheet, which is called Schedule L. All right, so $1 million for my total assets beginning is right. $800,000 for my total assets ending is correct. So then my liabilities are 200 and 160 respectively, and my partner count is 800,000. Let's just go down here. Beginning was 800. Net income per books is calculated by the system as 840,000, and then distributions are $1 million, so that gets us down to 640,000, and so that would be the partner's ending capital. So we should be in balance, and we are. Notice that it populated this for us. We had to give it the information, and then it populated it for us. So then we can double check our Schedule K. Everything looks fine there. And then we would just want to double check our Schedule K1s that are what we would mail to our partners, and this is what they would use to prepare their individual tax returns. And we want to double check that our partners' accounts turned out to be correct. So looking at your Excel for Ross, his ending partner account was 160, and all of them should have been, so we'll just make sure. Looks right. Carries 160 looks right, and 160 looks right. So that should be it. So let me know if you have any questions. And again, just go slow and check after each input that the software put it where you were expecting. And then let me know if you have any questions. Thanks.